It seems like we've gone past peak pessimism, and despite all the concerns around trade and tariffs, people are saying, look, Chinese technology looks fairly attractive.
Yeah, I mean, Tanvi, the Chinese tech stocks, as you know, have been, I would say, largely ignored by Western investors over the last few years. It started with the regulatory crackdown, and then the share prices have really underperformed, certainly compared to Western peers and on an absolute basis. I think what we've seen with these AI models is that the barriers to entry are perhaps not as great as some may have thought, and that the applications for the AI adoption and that leading into cloud storage could be coming much faster than people anticipated. I think there's a third point, Tanvir, and that is around positioning. You know, exposure to Chinese equities pre the move we've seen over the last 6 to 8 weeks has been at the lowest levels almost ever. So Western investors have made very good money in developed equity markets, and they haven't been incentivized to go to China. I think that's now starting to change. It's also worth mentioning, you know, I've spent a lot of time in China, know a lot of people on the mainland, that this moment around DeepSeek has really catalyzed a patriotism around innovation and spurring entrepreneurialism. People through the Chinese New Year were visiting the hometown of the founder of DeepSeek, taking photos, visiting his school, etc. So there is a real belief around the technological capability of China to use this as a catalyst to drive further innovation. And I think the equities are reflecting some of that. And that movement may just be starting in the eyes of a Westerner who is required to allocate capital there now.